tax, we still expound on value added tax. Did you know that value added tax is not payable by a supplier, a business person or a business owner at a rate of 16%? Here is the catch. The reason why someone will use you and lie to you that this deal that I had with you, I was supposed to give you this amount of money, but because I'm going to pay tax of 16%, I'll be able to reduce your amount by a rate of 16. That is a lie. This is the breakdown. When a person buys an item for sale from a wholesaler or from a manufacturer, that person receives something in tax called an input VAT from that person. When he pays out, or when he supplies, or when he sells the item, that person incurs something called a VAT output. Tax payable is not always tax that you have been charged on your Kenya Revenue Authority identification PIN number. It is always output VAT, that is what you have incurred in terms of tax as you do your sale, minus input VAT, which is the VAT that you earned by you purchasing an item that is VATable. So you'll be able to reduce the difference in tax that you have given out from your business, you less the difference of tax that you have received into your business. The difference in the amount is what you are supposed to pay. So tax burden payable can never be 16% by a business person. So if you have a deal with me, if we are doing business, me and you, or someone else is doing business with you, and he is the holder of the PIN that is VATable or that has registered a VAT obligation on it, that person does not qualify to charge you 16% VAT unless the items you produced and sold were items that you yourself, you are the originators of those items. But if you purchased the items together, then sold the items, this means at the point of purchase you received input VAT, and then at the point of sale you received output VAT. So you will take the output VAT, you will less the input VAT. The difference is the tax that will be paid. So you, as an informed person from me, when that person or when anybody tells you such a story, take your pen, take your calculator, and take your notebook. Ask him, how much did we purchase in this business at that time, and how much did we sell? What was the tax on the purchases and what was the tax on the sales? You will take the tax on the sales, you will less the tax on the purchases. The difference is now the tax liability of that deal. So that difference is